Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else. Friends, welcome to another video on your channel Profit and Equities. In this video, we'll be talking about 4 fundamentally sound stocks with big upside potential over the next 1 year. Now, these stocks have superior risk return profiles and have also scored well on fundamental attributes like revenue and net profits. This is visible in their overall results over the last few years. Now friends, this is not our own research. This was carried out by a financial news website and we'll be providing a link to the source for this video in the description section. Please go through it to build more conviction around your investment decision. Also friends, we have recently started offering channel memberships on our channel. This entitles you to member-only privileges on Profit and Equities. Please click on the blue join button below and follow the steps to sponsor our channel and in the process, help this community's growth. Also friends, if you like the content that we produce on our channel, please don't forget to like this video, share this video, and if you have not already subscribed to the channel, please click on the red subscribe button below. This will enable you to get notified whenever we upload a new video. Please watch this video to know more about these 4 stocks. Now the first stock on the list is Natco Pharma Limited, which is available at Rs 565.50 and the face value for it is 2. The symbol for it is NATCOPHARM. Now Natco Pharma Limited is a pharmaceutical company engaged in developing, manufacturing and marketing finished dosage formulations and active pharmaceutical ingredients. The company's segments include active pharmaceutical ingredients, finished dosage formulations, job works, pharmacy and others. Its product categories include domestic formulations, international formulations, APIs, and blockbusters. Now, this is an integrated research and development focused pharma company. Natco develops, manufactures, and markets both FDF and active pharmaceutical ingredients. Now, according to Nirmal Bang Securities, the investments in the agrochemical space and identification of niche, difficult to make products will give Natco a competitive advantage. Moreover, the company's strategy of looking beyond the US market and its decision to enter China along with new product launches make the future very promising for this particular company. Now, as is evident from the 1-year chart, this company has not been an outperformer, and after consolidating towards the initial part of the year, the company has been on a downtrend. The market cap of the company is 10,342.12 crores, which means that this company is a mid-cap one. The EPS of 45.03 translates into a price to earnings ratio of 12.56, which is dirt cheap when compared with the industry PE of 29.61. The price to book ratio of 3.36 is also not obscenely expensive. The company has a dividend yield of 1.46%, whereas the promoter holding is just below average at 48.71%. Also, none of the promoters' holding is pledged. The company has a total debt of 221 crores, whereas its 52-week high and low stands at 848.30 and 551.00 respectively. Now the second company on the list is Marico Limited, which is available at Rs 360.10 and the face value for it is 1. The symbol for it is MARICO. Now Marico Limited is a consumer products company operating in the beauty and wellness space. The company's principal products include edible oils and value-added hair oils. The company's geographic segments include India and international, which includes primarily the Middle East, SAARC countries, Egypt, Myanmar, Malaysia, South Africa and Vietnam. It offers various brands in the category of hair care, skin care, health foods, male grooming and fabric care. Now, this company is present in 25 countries across emerging markets of Asia and Africa. According to a research report by Narnolia Securities, the company's international business will perform better, aided by new launches and market share gains in Vietnam. Product diversification benefits in Bangladesh will also aid the cause. Moreover, declining copra prices and premiumization will help improve margins. Now, as is evident from the 1-year chart, this company went on an uptrend for the first few months of the year, then had a fall and has been choppy ever since. The market capitalization of the company is 46,484.03 crores, which means that this company is a large cap one. The EPS of 6.95 translates into a price to earnings ratio of 51.81, which is much more cheaper when compared with the industry PE ratio of 67.40. The book value of 19.80, however, translates into a price to book ratio of 18.19, which is on the higher side. The company has a dividend yield of 1.18%, whereas the promoter holding is a good number and stands at 59.71%. Also, none of the promoters' holding is pledged. The company has a total debt on its books of 346.20 crores, whereas its 52-week high and low stands at 396.60 and 282.95 respectively. Now the next company on the list is Ajanta Pharma Limited, which is available at Rs 1019.55 and the face value for it is 2. The symbol for it is AJANTPHARM. Now Ajanta Pharma Limited is a specialty pharmaceutical company engaged in developing, producing and marketing a range of branded and generic formulations. Its business includes branded generics in emerging markets of Asia and Africa, generics in the developed markets of the United States and institutional sales. The company serves a range of therapeutic segments such as antibiotic, anti-malarial, anti-diabetic, cardiology, gynecology, orthopedics, pediatric, respiratory and general health products. India Nivesh Securities believes that the company is likely to grow in 2019-20 once the newly added capacity is employed optimally. Moreover, new capacities at Dahej will help the company expand its generic business in the US and the emerging markets. The brokerage house expects 22% earnings growth in 2019-20 along with the expansion of margins. Now, as is evident from the one-year chart, this company has been a consistent underperformer and a lot of wealth has been destroyed here. The market cap of the company is 8,895.96 crores, which means that this company is a mid-cap one. The earnings per share of 44.99 translates into a price to earnings ratio of 22.66, which is much more cheaper when compared with the industry PE of 29.61. The book value of 233.93, however, translates into a slightly expensive price to book ratio of 4.36. The company does not pay out any dividends, whereas the promoter holding for this company is a very strong number and stands at 70.47%. However, another concerning factor for the company is that 12.85% of the company is pledged. The company has a total debt of 68.31 crores on its books, whereas its 52-week high and low stands at 1417.45 and 895.85 respectively. Now the final stock on the list is Godrej Consumer Products Limited, which is available at Rs 670.60 and the face value for it is 1. The symbol for it is GODREJCP. Now Godrej Consumer Products Limited is an India-based company which is engaged in the manufacturing of personal and household care products. The company's geographic segments include within India and outside India. The company's personal care range of brands include Synthol, Grade 1 Soap, Protect, Soft and Gentle, Cuticura, Me Too and Pamela Grant. Its home care range of brands include Goodnight, Hit, Air, Easy and Stella. Its hair care range of brands include Illicit, Touch of Silver, Roby and Renew. The company focuses on regions including Asia, Africa and Latin America. Strong market share, product innovations, increased pace of product launches and expected recovery in Indonesia are likely to improve its performance in 2019-20. Analysts recommend that investors should closely watch out for the revival in the domestic household insecticides business and the stability of its performance in the international business. Now, as is evident from the one-year chart, this company was on an uptrend for the first few months of the year, but since then has been on a consistent downward trajectory where a lot of wealth has been eroded. The company has a market capitalization of 68,546.46 crores, which means that this company is a large cap one. The EPS of 19.80 translates into a price to earnings ratio of 33.87, which is dirt cheap when compared with the industry price to earnings ratio of 67.40. The company has a book value of 61.23, which translates into a price to book ratio of 10.95, which is however on the higher side. The company has a dividend yield of 1.79%, whereas the promoter holding is also a strong number and stands at 63.25%. Also, none of the promoters holding is pledged. Now friends, please don't consider these to be recommendations on our part. Please go ahead and do your own research. This and all other content that you ever see on this channel are intended to be pieces of news. Also friends, please don't just jump in. The market has a large event risk going forward, which is in the form of the outcome of the elections. Please continue to monitor the stocks and only enter when you think that the valuations have corrected significantly. Also friends, if you like the content that we produce on this channel, please don't forget to like this video, share this video. Also, if you have not already subscribed to this channel, please click on the red subscribe button and get subscribed, which will enable you to get notified whenever we upload a new video on this channel. We would strongly encourage you to go to the source for this article in the description of the video and read it to build more conviction around the investment decision, and also to know the methodology why the creators of the source content think that these stocks could be outperformers going forward. Thanks for watching, and if you have not already subscribed to this channel, please consider doing so.